Alright, traders, so we're at the main event again, and this month, more than most, we find ourselves with some very interesting levels. Now in the back of this whole week, starting from 112 at the very open, the dollar yen's just been relentlessly rising up. Now, short-term positioning means that dollar yen now is long. Okay, so this is important to keep in the back of your mind, right? So dollar yen has some positioning here that's quite long. Now, is it justified? Of course. The bond market is the reason for this, not the US dollar strength or anything out there that's changed in terms of Fed expectations. But the bond market has been relentless in selling all week, and broke above 1.3, held 2.3 last week, and has been pushing higher this week. Now it's also up at some key levels, very similar to how dollar yen is. If you look back on the weekly chart, this will be at the highs of when the last dollar yen rally was. So dollar yen's very uniquely tied to the 10-year yields. Today in Asia, you saw a sharp little rally in dollar yen on the back of a BOJ bond buying initiative, and trying to cap the rise in yields in the 10-year there. And so the dollar yen reacted sharply to that. So it's well positioned in terms of technically and fundamentally to break higher. But in the backdrop of this, there's all these geopolitical events happening. Yeah, and these geopolitical events that are happening right now, especially into this G20 meeting, mean that I'm not going to be too happy being long dollar yen into this weekend's G20. The G20 is going to be focused on trade and on North Korea. Now, North Korea, we've seen these developments over the week. They haven't really spilled over yet into a meaningful impact into the markets, but are very negative for the yen. But negative for the yen actually means yen strength in this particular case, because when the Japanese investors are scared, they buy yen back. And the counter to that is the gold. All right, so gold is he's been ignoring all the geopolitical risk, and has been actually really quite weak. So we've been buying gold and selling on the rally, and mainly because it's just been capped, and really weird price action on gold, and suggests that, you know, perhaps a clean out on the downside is coming before any sort of rally. Now, the clean out on the downside in the backdrop of all these geopolitical events, I suspect sets up a situation where you clean out the longs, and then you go, then you have fresh initiations of long. So where would the long stops be? Well, 12.15 and 11.90. Now, I don't know if we can get to 11.90 on a strong number today, but gold seems to be wanting to go down right now, and dollar yen seems to be wanting to go up. So the main story the market's responding to is the increasing in yields around the world, not so much North Korea and G20. Can G20 and trade issues and potential sanctions on China by the US of companies that do business with North Korea turn into a major global political event? Of course it can. Yeah, and so this weekend, while dollar yen is well supported, being long, I suspect, is really dangerous, right? I mean, if the right sort of miscommunications are said, or if you know, Trump tweets something crazy, you know, the opening on Monday could be extremely negative. Yeah, and this is what I'm worried about here in the long dollar yen story, that the geopolitical events will finally play catch up, and then you'll see a sharp rally in gold and a sharp sell-off in dollar yen. But it really depends on what happens on the G20, so that's a bit of a wild card. What's the big rally that's going on sort of relentlessly in the backdrop? It's the euro. Now the euro yields are rising, and looks like the bears have been not capitulated just yet, but are getting near to that point. Now the bears have been trading in a range for a long time, long time. So the 115 levels, the stops everywhere above here, and a clear break above 115 and a hold above 115 opens up 120 here, and that's not a big move in the FX markets. That's just a potential clean out of the shorts, and then starting of a new trend as we get into the market buying into the ECB normalization story. And a weak NFP number, you know, it doesn't have to be by much, but a weak NFP number opens up that scenario. So usually I play dollar yen. Yeah, that's the main thing I play, dollar yen all the time. And this particular time, I'm not really keen to play a weak NFP number, you know, and so the expectations are it's going to be a little bit weak given the miss from the ADP, and the last 3 months from the non-farms have been not so good. So a weakness in the non-farms would open up this door for a bit of dollar yen selling, because it is a bit overbought short term, like we suggested, and there's so much geopolitical risk. And then buying the dip is normally what I would do on a weak number, say a forecast 175. So say a 140, I'd buy the dip. At 120, I'd buy the dip. Nothing's changed too much. The fundamentals should be the same still, so that would be fine. But with that overhang of G20 risk and North Korea risk, I'm a little bit more worried about playing that particular angle. All right. So what would be another way of playing it? An Aussie dollar rally on the back of a weak number is how I'm going to be playing. Because you know what we do in NFP is we play the reversal a lot. So you look at a trend and you find a trend. So the Aussie dollar has the most potential downside with the China sort of issue, and it's also looks like it's opted out of the global rate hike story. So a sharp little rally here on a weak number from the Aussie dollar would lead to selling, I suspect, towards 76.40, 76.50. That's the trade I'm going to be playing today, on a weak number. On a strong number, buying the dollar yen has its own risk because of that geopolitical risk, and you'll be buying very high, given the way the market is sort of positioned. So selling dollar yen on a rally at 114 or above 114, 114.20, 114.10, I suspect will work out. So what's a strong number? Maybe 200, 210. Anything above that though starts to affect maybe Fed policy. So 220, and obviously we have to look at the average earnings as well. And it won't be as risk reward to sell a dollar yen on a strong 220 as it would be on, say, a 200 or a 189 or 190, with as expected unemployment and as expected average earnings. If you get a 0.2 on average earnings and a 200k on the dollar yen, I suspect we can sell into that rally, right? Because the market will snap higher on the initial announcement, and we can sell into a 114 test, and then hopefully be short and in profit into the weekend, and if something negative happens at the G20, make money from that reversal. Okay, so depending on what it is, I'll be looking to sell into that. What about a really strong number like a 220 plus? How do we play that? Well, probably buying the euro dip. All right, so the way we make money is the trend continues, so the euro buyers come back in after the dip, or there's a normal whip that happens a lot in non-farm payrolls where the market tries to take out both sides of the stops, and so a dip, say on the euro down to 1360 or something, and then a rally up to fresh day highs is not crazy. Yeah, it happens all the time in non-farms. So you know, I'll be looking to buy the dip on a strong number. If it's as expected, it becomes a little bit okay, we see what we want to play, but probably selling Aussie is a cleanest choice here. Now, why do we sell the Aussie? Mainly because of the geopolitical risk and the opting out of the global rate hike story and being left behind by the global yields, the yield compression story. So euro yields rising, and US yields are rising, but the Australian yields aren't, and it's losing its advantage, and iron ore's having a little bit of problems this week, and you know, RBA was a little bit neutral, and any geopolitical risk is the kicker, right? So China stories usually hurt Aussie most, and sanctions on China from the US over the weekend, or talk about sanctions on China, would probably open up Aussie dollar lower on Monday. So that's the way I'm playing all the scenarios today. We'll review them just before the announcement. Wanted to give the little rant to begin with. And see what happens. I haven't read that yo-yo. May figures might have missed some data. Okay, yeah. Let's we'll give that in the back of our mind. Yeah, okay, possibly, yeah. But I don't think that changes the game, or what pairs we're playing and why. So the euro's in play, the dollar yen's in play, and the Aussie dollar's in play. but probably only looking to sell dollar yen, only probably looking to sell Aussie, only probably looking to buy euro, given different scenarios. Alright. Pound's just sneakily going down here. I was looking at the euro pound before the stream started. These are key levels, guys. Like if this breaks, then a move on the euro pound up to 0.9 is really on the cards. So we've got to be a bit careful. It's been stubbornly strong euro pound. Must make for some very annoying sort of shorts at this stage. I haven't been selling, and it's usually the sort of trade I sell. And it's a pair that we talked a lot about in the last 8 months since I've been streaming here, selling euro pound rallies, and I haven't been doing it for the last month for a couple of reasons, mainly because euro is so strong. But as a euro pound seller and trader, I know that geez, they're getting pressured, and that could be leading to more selling in the future. Now supposedly Carney could be speaking any moment. I haven't heard any comments yet from him. I haven't really even seen when he will be speaking. He's speaking today. It is not really on topic. It's on climate change and economic effects, but that could be something that gets the market moving. If he says, I don't know, if he says anything that the market can use as an excuse to sell the pound. The pound is struggling to hold 130. This is if you're a buyer of the pound, you have to be worrying about the trend here, and you know that the sellers have gained back control, because the previous high was not retested. 130 wasn't even retested, and this is at the same time when the US dollar's not exactly gangbusters. And remember, the euro has a huge amount of potential relief rally after they start tapering, whereas the pound is talking about stopping emergency cuts. That's only 1 or 2 rate hikes, nothing crazy, and the longer term rate hike cycle is still further away. So the pairs which really in play in terms of the change in the central bank status is the euro, not the pound. The pound has its own recovery chances just because it's been so belted down on Brexit, but the Brexit negotiations are still too immature to get a solid recovery rally. I suspect right now, a little bit more clarity about how they're going to play it would be ideal in that scenario. Also, stocks have been a little bit under pressure in the last couple of days. Definitely in the DAX, you've seen that. Now, strengthening DAX on a weak number would also probably hit sentiment for the Dow, and the Dow at these levels doesn't need much of an excuse to go down, and the geopolitical risk is also there. So you know there is a chance here that the euro can test and break 115 on a weakish number. That's a big feat though, breaking 115. It's not a small number in the world of trading. That's a huge thing, right? It's like you could almost put it at same level as 105 or parity. Breaking and holding above 115 would have massive ramifications for analysts, for traders going into next week. So if it does break and hold, then it's going to get interesting. I don't have too much euro exposure at these levels because it is so high. But definitely I don't mind buying next week if we break and hold above 115. That's a pretty clear trade. Alright, let us have a look at a little bit of the review. We've got 10 minutes left before the announcement, 12 minutes left. And I want to read a little bit of data and analysis for you, and then review what I said we're going to do based upon the data. And yeah, that's right. Yeah, that's right. Based upon the data, then you know we'll play it as we watch the price action after the announcement. No trades open at the moment. Pretty clean. And so yeah, let's have a little look at some of the NFP preview. So we've got Nomura here. Indicators pointing to a healthy payroll gain. Further tightening in labour markets. I mean, these numbers, even though they miss, are still pretty strong. They're still pretty decent, above 100,000, right? Average for the last 6 months, 161k. This is probably written by an economist, not a trader, though. Keep that in back in mind, because we care about how big the miss is. more than anything else, and the positioning of the market going into the announcement, right? Who's long, who's short, how heavy is the market movement in the week pre-NFP or the month pre-NFP if there's been a major trend like there has been in the euro. They're forecasting 160. The markets is forecasting 175. Given the weakness in the ADP, we're probably looking the market number maybe towards 160 itself. Okay, because you know that weakness in the ADP pulls down the expectations. Alright, here we go. We got Yo-Yo's little comment there. Let's have a look. One upside risk to our forecast involves a calendar quirk in the month of May, which likely resulted in a one-off month of weakness from May. To the extent of our payroll forecast and modern corporate lag values, particularly in the next month, May's print of 130k introduces a slight upside risk to our forecast. Okay, so yeah, the economists know about this statistical issue. Alright. Okay, so if it's a bumper number, it won't be taken as seriously, right? A 220 won't be the same as a 220 maybe in previous times. Very important is this other number that comes out with it. Okay, the other number that comes out with it is this hourly earnings. That's really growing in importance globally. And this, if it's 0.3, that's actually pretty strong. Because year on year we roll into around 2.7%, which is getting up there, starting to tick higher. If it's 0.2, that allows us to sell into any stronger number here. Okay, this number really doesn't get too much play anymore. So it's all about the average earnings, all about the non-farm headline number, and then we go into the internals after. Canada data also comes out at the same time. We will be looking at this 10-year though to see what the reaction is on the bond market. Bonds going up means yields going up means there's been a lot of bond selling this week, and that's not really fitting with geopolitical issue. So stocks really haven't fallen. No reaction to North Korea yet. So if we're talking about a reaction to North Korea next week, if something sort of dangerous develops over the weekend, there's still serious potential downside here in stocks and upside in gold and downside in dollar yen, much more than a chart would suggest. The charts can't really factor in geopolitical risk of that level magnitude, yeah. And so 200, 300 point stuff is not uncommon. Yeah, we'll go over again what we talked about at the start there, Big Short, about which pairs we're playing. We're looking to sell dollar yen on a stronger number. If it's not too strong, we're looking to buy euro on a dip if it's very strong, and if it's very weak, we're looking to sell Aussie. Okay, because we can hold it into the weekend with a little bit of extra potential resumption of downtrend for the Aussie on a weak number, given geopolitical risk. And we can sell a slightly stronger number from the dollar yen at 114 because it's a big level, and because there's the wild card from the North Korea as well. In general, going with the market trends is what you want to do, but NFPs may be the exception. Yeah, maybe the exception. So a stronger number as well would lead us by by euro on the dip. That would be fine. So slightly weak, we're selling. Slightly stronger, we're selling dollar yen. Very strong, very strong, we're buying euro. Very weak, we're selling Aussie. And whether we go for 20 pips or not probably depends on the price action or afterwards. You know, it could just be a retracement play. It could be let's see what happens over the weekend play, depending on how it turns out. I doubt that these levels, that the dollar yen can substantially break 114 on a very strong number if you are a dollar yen trader, or that the euro will break 113 on a very strong number. Pound I'm not trading. and dollar CAD I'm not trading because it's a little too hard to digest the multiple impacts on CAD at one stage. But keeping an eye on US yields and keeping an eye on the Dow Jones, you know, we sort of can put a little short-term model in our head. If it's as expected, like 180 or 160, it's going to be pretty mild reaction, I reckon. Pretty mild reaction. So yeah, we've got 5 minutes before the announcement now. I use Twitter at home. It's fine if you follow 200 traders and a few financial services, that you'll get the numbers really quick. I mean, immediately the fastest way to know if it's good or bad is watch dollar yen, but you want to know the internals pretty quickly. Forex Factory is fine, but it's it can get overloaded and can drive you crazy in that overload scenario. I haven't used them for a long time though, so maybe they're better now. Still, someone at Forex Factory's headquarters probably has to type them in, so you know, I can't expect it being too much quicker than Twitter. Ideally, I want to get a Reuters machine at home, but they're not cheap. Not cheap at all. You can get the light version of Reuters for $100, $150 a month. I haven't really looked into that just yet. Just quickly, we'll check the technicals on the majors. So your 115 is, everyone's looking at it saying, are we going to break it? Is it going to be another year that we hold 105, 115? Dollar Swiss, just not really what we want to watch. Aussie dollar. So 200-day moving average is easily attainable, easily testable on a stronger number here. Market's basically looking for an excuse to sell Aussie dollar at the moment. Dollar yen has some major resistance up here. The next 100 pips, 150 pips are really key. I don't know, it doesn't seem like it's time for the dollar yen to rally. And euro yen, we didn't talk about euro yen. Obviously we talked about the euro pound, but the euro yen is at 130. That's the target I had for the year end. So that just happened in 2 weeks. Now, where we're here, the only reason we're here is we've got the combination of the strong euro and the strong dollar yen, 114, 114. Both of those can fail here. This is reversal zone. If we can hold above 130 and one of the, either dollar yen resumes uptrend towards 120 or the euro resumes uptrend towards 120, then we can kick higher here. But there is bigger risk than normal on euro yen at these levels. This is really overextended on the short term, so I don't mind euro yen. I love euro yen. I just want to buy a dip, and there's a few ways we can get that dip, especially if geopolitical risk kicks higher. We'll keep an eye on gold as well. That suspect that can't rally with all the reasons to in the world. I don't know. I think the stops under 1200 are probably vulnerable here, and then then the market can go higher. Just clean out everyone first. Alright, got data coming, so guys, 50 seconds. Let's get ready. I don't like to respond immediately. I like to sort of wait for the initial reaction, first 5 minutes. Probably do a trade in the first 5 minutes though, but not I don't sell on a weak number, buy on a strong number usually. And if it's an outrageous number, then we have to sort of make a new plan. Sub 100k sort of stuff, right? That's where it gets a bit tricky. Okay. A little bit stronger. Let's have a look. Really must be at expectations. Come on, Twitter, don't die. Okay, I think we have ourselves a fairly mixed little bag. Really nice headline number. And a mixed hourly earnings. Okay, we're selling into the dollar yen on that. Mainly because of the geopolitical risk and the price action here. The market should have gone higher than on the headline number there. So we'll see how that plays out. So the weakness in the hourly earnings opens up the door to selling, and the market will try to buy it. Short-term buyers long. You know, there's multiple reasons you can sell here. You're gonna sell. You're gonna sell. And have a think. Okay, just 1 second. We'll just see what's going on here. Too mixed for the algos, right? Too mixed for the algos to play. Stocks are liking it. Gold is down as well. Okay, jeez. Gold just can't catch a break, guys. I'll sell again the dollar yen if we get to 114. Unfortunately, this is probably going to be extremely muted reaction. I hate to say. I don't know, maybe we can sell some dollar yen. Sell a little bit of dollar yen on a side account. Selling dollar yen seems to be the trade. If we're going to do anything right now, just because of that, you know, sell and go away for the weekend. Let's check the US yields. So this is slightly stronger. You got the people wondering if it's maybe because of those May effect, and you got weakness in the average earnings. So it would have been easier to sell if it was like a 180, 190, 200. 220 is a little bit nice number, right? It's a bit bigger. So probably there's buyers out there too on the back of this. But not getting reaction in the yields either, so too much. No, it's kicking low. Okay. Euro yen. So Euro yen's dragging higher, the dollar yen too, a little. So you know, dollar yen usually is the monster in the room, and it can't go lower if euro and euro yen are going higher sharply. Might sell again. Sell again, and this trade is going to turn into a bit of a medium-term trade now. I want to be short into the weekend, guys. Yeah, so unfortunately not a huge reaction, and I can't suggest that you go gun-ho into anything. CAD numbers were very strong. Wow, there's a really big chance now there's a rate hike next week. There's a really big chance. Let's have a look at CAD. CAD new lows. Oh, no, not new lows just yet. Probably soon though. So selling Aussie CAD makes sense here. But that's about it. Yeah, CAD's just broken though. So the market's going to start pricing in a rate hike. I don't think they will rate hike. Just slow it down a little bit, but the market thinking of that will lead to that rally. It's going to be interesting, the price action next week on dollar CAD going into that. Alright guys, yeah, I mean that's it in a nutshell. Let's keep an eye on the euro here. I mean the euro is looking like it's trying to continue. Maybe we'll get a nicer level to sell dollar yen. I know that it's a bit pussy to sell here. Close out. I want to see if the euro can kick on. That's part of the game. If the euro can't, then it can lead to, you know, effects elsewhere. You're not seeing gold go crazy. You're seeing stocks go up. That sort of supports dollar yen a little. You know what I mean? So there's other factors other than just US dollar weakness. I don't think people are too keen to sell dollar yen just now. I do want to be short dollar yen into the weekend though, guys. Not selling the euro, no. You can. I mean, it's a nice level. Probably okay. I mean, you're selling against a really strong fundamental trend though. Just really nice levels. So I'll be looking to sell dollar yen later. Now I do not know. I don't think we have an immediate after party this week with Andrew and Jason. Here we go. It's getting back to the sell-up. So the whip could come in via the euro, down and then back up later. But literally this is one of the quietest NFPs I've seen ever. So little monies, we made a little bit of money selling the euro, dollar yen. I will sell dollar yen again later, guys. I want to see what happens here with the euro. I mean, you can actually, you know, make the case not to trade this at all. It's sort of ridiculously low volatility. What we might do is actually sell a little bit of Aussie dollar against something. Let's have a look at Euro Aussie. Well, this trade makes sense too. This is another way of getting long, long on the euro, and also you get a little bit of exposure to any sort of G20 news. So that's another trade that you can do as well. It's a different sort of trade. It's taking the US dollar out of the equation. It's just whether the Aussie can resume its nascent little uptrend, or you know, the euro is going to kick higher. Over time, this euro Aussie should go higher. It's in a nice uptrend and it makes sense fundamentally. Alright guys, I hope you enjoyed tonight. It will be better. There will be more volatility in the future. Don't worry about that. NFP is you know, just one of those events that you don't get always that volatility you want. And selling dollar yen at 114, if we get that a little bit later, will be a high probability trade in my opinion. But you always got to, you know, no trade's 100%, so don't just listen to some guy streaming at you. must have a stop loss, must be watching what's happening, reading the news, and getting involved. Okay, be an active trader. You'll learn more that way. Let's quickly check Euro Yen. Ooh. See, Euro Yen break 130 does make it a little bit more dangerous selling dollar yen, guys. So let's see how it plays. Probably still okay. Alright, traders, best of luck tonight. If you're going to be trading you know, the rest of the price action. I don't know if we're going to get G20 headlines before the weekend. You might, because G20 meetings are starting today, but you know, definitely over the weekend there's a lot more risk than normal, so keep that in the back of your mind. If I sell dollar yen later, I'll probably put a trade idea in the room, so stick around. Alright, best of luck, guys. Thanks for tuning in.